What is going on, Lucid fans? Welcome back to Financial Journey. So since we do have a little bit more clarity coming out from the Feds as far as interest rates, what they plan for 2022, I think a lot of people are now looking at a lot of their investments and seeing if it's actually safe, seeing if their balance sheets are fairly good to sustain and be able to survive in a higher interest rate environment. So I'm going to break that down for you and go over Lucid, go over the good, the bad, and the ugly, as I always do. In addition to that, I'm going to be talking on the Sapphire. But before I get into any of that though, making sure you guys hit that thumbs up and subscribe is always greatly appreciated. And with that though, let's get right to it. Live ticker is going at the very bottom of the screen, currently down 7.8%, 10.4 million for volume, 19 the average, and 662,000 shares being purchased by institutions on the secondary market. So despite the higher volume, institutions are clearly taking a step back on the secondary market over and above, even on the dark pool as well. Dark pool transactions are a little bit lower, so clearly big money is not really liking how the Feds were giving guidance. So in case you guys missed it, they did raise roughly about 75 basis points, which I believe was the estimate and the forecast. But what they gave as far as guidance after that, that's what sparked the rest of the market. So they do actually want to raise it to 4.25% just this year alone. So that's basically what's causing a lot of individuals just to be spooked. In case you guys don't know, the market absolutely hates surprises such as that, which begs the question. It was floating around on Twitter. I don't know why Powell just doesn't rip all of this off like a band-aid and increase it to 4.25% from the get-go and not have all these what ifs, because every single month for the most part we're on the edge of our seat. Are they going to raise it 1%? Are they going to do 75 basis points? 50 basis points? What are they going to do? To eliminate all of that and all of the excess fear that's prompted by all of this, just raise it one time and that's it. So it is a very interesting concept, but keep in mind though, I'm not a financial advisor. Do your own due diligence at the end of the day. But a lot of people, like I said, are looking at their balance sheets to see if it is safe, because obviously nobody really wants to have higher interest rate environment and to carry a lot of debt. So looking at the last balance sheet from the Q2 earnings, Lucid does have 429 billion in cash equivalent short-term investments, 278 million long-term investments, 2.24 billion in debt. So when it comes to it, a lot of investors need to really focus on obviously cash and debt. And not only that though, they need to look at what the actual debt is from and when it's due and things like that. For instance, in Lucid's case, the 2.24 billion, 2.2 of that is low cost as far as that senior debt offering that is due, I believe, around 2026, 1.25%. So regardless, as much as they raise the rates potentially, so as you can see, currently 3.25%, but even if Powell does want it to the 4.25%, Lucid is paying only 1.25%. So very advantageous for Lucid in that regard. So a lot of people, like I said, need to really look at the debt and possibly over and above that, how much a company is possibly burning. Right now, cash from operations, Lucid is burning 1.61 billion, which is pretty substantial. So you need to factor that into the cash. So 4.29 billion, this is why over the last several earnings, they said that they basically have up until Q3 of 2023 for the amount of cash to survive without they needing to dilute or anything like that. And this is where that recent S3 comes into play, their 8 billion shelf offering. So in case you guys had any questions or anything like that, make sure you guys hit that thumbs up and subscribe. I'm going to be having Warren Rutledge, obviously the dreaded Warren, on my channel. We're going to be talking about the good, the bad, and the ugly. Probably in his case, he's just going to focus on the ugly, but we're going to be talking all about Lucid. So make sure you guys subscribe so you guys can stay tuned for that. But getting back to it though, that 8 billion shelf offering is definitely going to add eventually, whenever they do decide to do that, a lot to cash. Keep in mind the shelf offering, they have roughly about 3 years to complete as many transactions or issuances as they would like until they reach that 8 billion. So that's something you need to factor in, but still clearly that's dilution, not necessarily anything to do with debt. Of course, when it comes down to it, nobody really likes dilution nor debt. But the fact that it is a company that people are willing to consistently buy, more so even from institutions as well, I personally feel that Lucid is going to be very, very safe. Of course, the market will potentially bring it down, but as far as bankruptcy or it being a bad investment, even in a higher interest rate environment, I do not feel that is correct whatsoever. I personally feel that Lucid is very safe as far as fundamentally and balance sheet wise. So let me know your thoughts on that in the comments below. Over and above all of this fun jazz, they do have a $1 billion revolving credit. So line of credit basically from the syndicate of banks, I believe that was what they called themselves, Bank of America and so forth, many others. But still, generally speaking, Lucid does have a lot of access to credit. But based on the Q2 earnings and how they spoke of that revolving line of credit, most likely that's a little bit higher interest rate. So I don't think they will be doing that, which is probably why they did this $8 billion shelf offering. So I think generally speaking, they do have access to a lot of cash, but it is going to dilute. But in the end, though, I think a lot of us already realize this is going to do a lot of good things in the future. Eventually, most likely post 2023, so 2024, interest rates will start to go down. My own 2 cents on how I see things, especially considering as well what Powell kind of reiterated on how he has basically no intention to bring down interest rates. So very interesting developments that is going on in that regard. Over and above that, it does look like Jeff did actually post this as far as car and driver. So it is listed on the Sapphire. We all know, generally speaking, the Sapphire, although it is a little bit more higher as far as a price point than a lot of individuals would be liking at $250,000. But I think it is more beside the point. It's more of a feat of exactly what Lucid can do as far as technology. So I think that's a very good thing. Clearly it's getting noticed, as it most likely is going to continue to get noticed because it's the most powerful EV out there. Not the most cost effective, but still, when it comes to it though, a lot of people are willing to pay that price point if they are one of those individuals that just wants the best of the best. So let me know your thoughts on that in the comments below. I do want to give you, especially with the red market, a quick update on some shorts on what they are exactly doing. So as of right now, it does look like live data, 382,000 shares that are increasing. So despite being down 8%, give or take, they're actually still increasing. So clearly they're adding on to the selling pressure a little bit. So let me know your thoughts on that in the comments below. Clearly there is a good opportunity to buy, but based on the actual technicals, things are breaking down a little bit. So when it comes to it though, I'm just going to break this, give you a quick summarization of this. So on the actual chart, stochastic is currently at 43, but you do see that red line above the black, a little bit more of a bearish trend. Momentum, number of retail investors are clearly so much spooked today. They're just out for lunch. Maybe they took a long weekend. I don't know. RSI is currently at 37, and on the actual chart, lower percentile of the Bollinger Band, but we didn't break outside of that though. So most likely we're going to stay exactly where we are. So I don't see or anticipate a bounce from here. So depending on some possible other external factors that might come early next week, we might be able to recover a little bit, but I think the damage has been already done into the actual broader economy and Lucid. So I think we might be around this range and sitting here for a little bit. So let me know your thoughts on all of this in the comments below. If you haven't already, hit that thumbs up and subscribe, as it was greatly appreciated. If you do like my channel and support the growth, take a look at my memberships, link in the description below, or just hit the join button at the bottom of the screen. With that, I appreciate you guys watching. Let's all make a lot of money on Lucid.